Welcome to the NPO 101 series Fundraising Overview. My name is Maria Griffin with Spo-ka'nay Enterprises, and I'm your trainer facilitator for this workshop. To provide questions or ask questions during the presentation, please enter them into the chat box. Click the chat button at the bottom of your screen. This will pull up the chat box that will open to the right side of your Zoom interface. Please use the raise hand function under reactions, and we will unmute your line to verbally ask questions during the Q&A portion of the session. Additionally, we ask that you select the speaker viewport option located at the top right side of your Zoom interface. This will allow you to see the speaker, me, as I present or share information for you. If you need technical assistance during the session, please type the issue into the chat box and one of our techs will respond to you. Finally, please be aware that today's session is being recorded. Closed captioning is available by clicking the CC icon at the bottom of your screen. Okay, so we got the housekeeping items taken care of. So let's go to the webinar. So here we are. Today's the September 14, 2023 episode. And this is the live version. And the recording will be replayed on September 20th, 2023. So if you can only stay for part of it, you can catch the rest of it, or you can watch the recorded session on the 20th. So let me get this. Come on. There we go. All right, before we get started, I want to read this Truth, Equity, and Justice Acknowledgement to make sure everybody understands what this is about. Every community owes its existence and vitality to generations from around the world who contributed their hopes, dreams, and energy to making history that led to this moment. Some were brought here against their will, some were drawn to leave their distant homes in hope of a better life, and some have lived on this land since time immemorial. Truth and acknowledgement are critical to building mutual respect and connection across all barriers of heritage and difference. So we begin this meeting acknowledging that we are on the ancestral lands of the Spokane tribe of Indians and other tribes who are connected through a shared history of, trade, celebration, and resources. We make this acknowledgement to pay respects to their elders, past and present, whose knowledge remains on the land and within their people. Please take a moment to consider the many legacies of violence, displacement, migration, and settlement that bring us together here today. And please join us in continuing to learn about such truths and actions we can take towards restorative justice. This acknowledgement is credited to Jenny Slagle of the Yakama Nation tribal member and a Northern Arapaho descendant, and she's now with the Inite program. Inite as a program officer, and she owns Indigenous Eats, which is a very good place to have Indian tacos. Anyway, I put this in here because I felt that this was a very, very well written acknowledgement, and it talks about not just the Spokane tribal of Indians who live here, but everybody who lives in this area and who's been here for a long time and who are here now. Okay, so the next slide is meet the presenter, Maria Griffin. I am a Spokane tribal citizen, and I own Spo-ka'nay Enterprises. I have core competencies in professional writing and training and technical assistance. And if you have any questions or anything you want to know about me, you can ask them during the questions and answer sessions. So our agenda today, we'll be going over some goal and learning objectives. I'm going to recap 3 pieces from the basic foundation of NPO from our last workshop that we did. And I'll be looking at the grant readiness checklist, nonprofit holistic model, and 2 business models. I'm not going to spend a lot of time on them, but I will just spend maybe a couple minutes on each just to get everybody aligned with what we were talking about then. We'll go over some definitions. We'll go through a case study because I'll be using parts of the case study as examples through the rest of the pieces here, which is how much money, types of funding sources, a fundraising plan, and a compelling story. So for workshop handouts, and I believe my tech here, Brandon, he will be posting these in the chat box. The grant readiness checklist, the holistic NPO model, and the plateau traditional cultures, a case study. These will also be sent out in the follow-up email, so you can have access to those as well at that time if you can't download it from the chat box. Okay. So the goal. So the goal of this workshop is to provide the attendees with a fundraising summary or overview. And the learning objectives. As a result of this workshop, the attendees will discuss how both business models work together for the benefit of the nonprofit organization, explain which of the two business models fundraising falls under, financial or revenue, and identify at least 3 fundraising sources to pursue. So the first recap, a grant readiness checklist. And basically the grant readiness checklist is an essential document that lists commonly requested items by your funders. And that could either be at the federal government level or another state government level, or as private foundations too. It allows you to streamline essential documents so that you have them on hand and easily accessible. And it assists in identifying any gaps within your organizations that you need to fill in order to be ready to write a grant. So this is what the handout looks like. And as I said, we went over this at the last workshop. And the checklist parts that are there is the organizational infrastructure, tax documents, financial information, governance, initiative or program, project information, and other documentation. So those parts are things that you need to look at. And I want you to have these on hand because we'll be talking a little bit of referring to some of the things that are in that checklist. And then for the nonprofit organization holistic model on this recap, this is the handout that you have as well. And this is what it looks like. And what we'll be talking about here is we'll be looking at mission management, which is the program and services part, as well as the revenue management, which is the fundraising. And I kind of wish this was a 3D model and I can show you an arrow that goes over the top to revenue management that goes between revenue management and mission management. And then we'll also have a little bit to do with finance management either as well. The rest of this, the staff and volunteers will be mentioned now a little bit here and there. So we're going to be talking about little pieces here and there, but mostly focusing on mission management and revenue management. Okay, so the two business models. I'm going to spend a little more time on this one because this is an important piece of those two areas that we were looking at. Now, mission management is the business model number 1. And the mission is what the board and staff do to fulfill the community expectations. And that's the top of the apex here of this triangle. And then capacity, which is to the left, is what the community expectations are. And they want quality programs and they want quality services. And then the left-hand corner of the triangle is finance management, basically monetary stewardship. How well does your nonprofit manage its money? And do they do it in a way that benefits the community? So that's where the orange arrow is pointing. There's mission management as part of the model there. Mission management provides its services to the community through initiatives, programs, and projects, and managed through the program directors and the evaluation director. So the evaluation director actually is the one that determines or surveys the community as well about the quality of the programs or projects given and if it's what they want. Business model number 2, revenue management. So this is the second part that we'll be looking at. And as you can see, there's a black bracket underneath capacity and finance, and it's called revenue management. That's the NPO business number 2 there in that diagram. So what revenue management does is provide reliable funding to sustain programs and services. And then revenue management also intertwines with finance and capacity. So that means under capacity and finance, they talk at mission management as well as making sure that once the money comes in that the revenue management has raised, they hand it over to finance to manage all that money around the whole entire organization. And there's the arrow pointing revenue management there is fundraising. So revenue is another name for income, and it is known as fundraising, and it's the second business of an NPO. And as I said, once it's raised by the revenue management, then the finance management oversees the income and allocates it as it needs and makes sure all the books are balanced. If you have questions as we go along, you can enter them in the chat box, and then we'll go ahead and go further here. I want to make sure we're our time is. I want to make sure we have a little brief break in here because last time I went the full 2 hours and I think a lot of us got deadheaded. So we'll take a brief break here in a little bit. Okay, so for definitions. I thought it'd be good to put some definitions in here so everybody would be on the same page as to what I'm talking about. So projects have a limited time frame and a budget. Programs are a group of projects that work together towards the same goal. So, for examples, I put in here a food sovereignty program or a youth leadership program or opioid prevention program. And you can have several different projects under each of those programs that work towards making sure each of those programs are fulfilled. And then a program project cost estimate is the amount of money you expect to spend on that program or project. And program project budget is how you track the program or project money in your company financials. And capital expenditures are a one-time purchase, and operational expenditures are reoccurring costs. So go ahead and go to the next. The next page says in-kind are services, goods, or time given in place of money or cold hard cash. And monies are hard cash awarded through grants or donated by individuals or organizations. Direct costs are expenses that are associated only with the project or the program and are, oops, sorry, my camera's in the way here, and are not shared through the organization. So they only are part of that program or project. And indirect costs are expenses that are not directly associated with the project or program, but may be allocated for payment, generally as a percentage by the project or program. So what that means is that you can think about indirect costs, overhead costs. And if your project or program occupies a certain space in an office, say, and maybe that's 10% of the office space, so 10% of the cost of the rent would be charged against that project or program because that's the space they're occupying. Same thing with if they have a shared project coordinator, like you have a project coordinator that works with like 3 different projects, but in different programs. So each of the programs have a specific percentage of that project coordinator's time. So all of that, the labor cost as well as the full labor cost, which includes any benefits or health benefits or anything that's associated with that particular project coordinator, that project will pay for that allocation of that person's time. Okay, boy, we're doing pretty well here. So the next thing is the case study. And this case study is called Plateau Traditional Cultures. And I wrote this several years ago as a way to take a look at to learn so people can learn about organizational development, program and project development, how to budget, what the different kinds of budgets that are located in organization, and also about fundraising. This is a fictional nonprofit organization, and it is one of the handouts that you guys are receiving. So besides the grant readiness checklist and the NPO holistic model, you'll also be taking a look at this. And part of this, it's like I think it's like a 15 or 16 page document. And this document also has the different budgets and stuff that I have pictures of here so that you guys can go take a look at that on your own and you can see what those look like in the actual piece of paper rather than on the screen here. Because the pictures I had to cut them in half so they don't look quite right. So the main question about fundraising, how much money? How much money does the organization need? How much money does all the programs need? How much money do the projects need? So how much money do we need to make sure our beneficiaries get the quality services, get the quality products, and receive quality things that they need to make their lives better? So before we go any further, to answer that question, we need to understand that there needs to be internal collaboration. And the whole reason for the holistic model is to show that all of those pieces in there collaborate with one another as well as with the community so that the nonprofit organization can be the best that they can be in providing services, quality services, and quality projects and products and things that the community needs. And so the collaboration is a very important word, and everybody needs to work together on this and to make sure everything works well. So as we said before, mission management is the programs and services that the organization has. And they inform revenue management of the number and types of resources that they need to successfully implement all their programs and all their projects within those programs. And this is really, we'll go over how this works through here as part of the program and project development piece. And then revenue management informs mission management of the number of types of resources currently available and the projected number of types yet to be obtained. So they have to work together. So mission management lets them know, hey, we need this many number of people, we need this many number of shovels or bags of manure, or we need this many carts or something like that, or tents, or whatever was needed for the program to be implemented successfully. And revenue says, oh, we have enough money to purchase this many bags of manure, hire these many people, provide these many things, but you still need X amount of dollars. So let's work together to find out where we can find that money. And that's an important piece that I think a lot of nonprofits and other organizations don't realize, is that to find that money, everybody has to work together because everybody has an idea where that money can be found. And it's more than just grants, and it's more than just donors. It can be different kinds of resources as well. So for mission management, to find out what resources are needed, you have to identify when in the year the program or the project activities occur. So an example to do this type of thing, to find out how this works, you get four, and I use this quite a bit and it seems to work really well, is there's 4 easel sheets, each marked sequentially by quarter. Sheet 1 is quarter 1, sheet 2, quarter 2, etc. And then each quarter mark the months associated with that quarter. Like for quarter 1 will be January, February, March, quarter 2, April, May, June, quarter 3, July, August, September, and quarter 4, October, November, December. Sorry about that. I had to stop and think about that for some reason. And then write each project or program activity on a Post-it note and include the cost of the activity and the amount to be met. And then place each Post-it note on the appropriate sheet in the appropriate month. So here's an example of this. So I went through and looked at the Plateau Traditional Cultures, also known as PTC, their traditional ceremonies program activities with the resources needed at cost estimate and cost estimated. So we'll go over the cost estimates here, but you'll see here that I have here under January quarter 1, regalia materials, fabric, ribbon, thread, $5,595. Now that's for the entire year that they have to spend to make this. And this is for, as you read through the case study, it will tell you how many people, how many participants will be taking part in this. And so you'll see why that's a lot of money. Same thing with the camping gear. It's more than just tents, sleeping bags, and costs. There's a lot involved here, but it won't fit on the Post-it note. So I could just put the camping gear in there. Same thing for plant identification under April and May. And then ceremony supplies down here at the bottom here. And then miscellaneous here covers both May and June. And we need a U-Haul truck to haul down all of this stuff down to the camping area where we're at, the location we're having this at. The fuel, which is the gas to pay for the truck, as well as any other things that need to be having fuel. Like I think I have a concession stand or something that we rented, and then any incidentals. And then food preparation is for June, and then food preparation class 1 is separated because this is the stuff that can spoil. So you have to buy it like the day or get it the day or two before the whole thing starts in June. And same thing for July and August. That's how come it's broken up that way. So this is an example of how you can use this past thing on activity on how to determine when the activities occur during the year and how much it's going to cost that particular quarter. So that helps the revenue management understand, okay, you need this amount of money in quarter 1, or you need this amount of money in quarter 2 or quarter 3. Quarter 4 is empty because this is for the current year. We could also put in here under quarter 4 next year, and you can buy things ahead of time. For example, any of the food preparation pieces, like if you need to buy mason jars or you need more camping material, usually there's some good sales at the end of the summer, so you can go ahead, or during harvest time, so you can go ahead and buy those ahead of time for the following year. And that's something that you want to keep in mind when you're planning your programs. When would be the best time to spend my money? When is the best time to buy things that are on sale, that don't cost as much as they are at full price? So the process here for finding the resources needed is that you review the project activities that need resources, and that would be either people, money, or materials. You create a timeline or a schedule when the funds need to be available for resources needed. So you transfer the information from this thing here that we just went through, this activity here, into an actual timeline so people can see when's happening when. And then brainstorm with your mission management team to identify funding sources to share with the revenue management so that they can bring in the monies to cover the program expenses. And then when you use brainstorm and you have all this other stuff, then you use this information to develop a fundraising plan. And that fundraising plan can be specific for the program or specific for the project, or it can be the whole entire fundraising plan for the entire organization. It just depends on what your organization wants to do. Personally, I prefer doing fundraising plans for programs, and then make it as like a chapter as full of the whole fundraising plan for the organization. That seems to work best, and everybody knows what that plan is and they can follow that plan. So revenue management, what they need to do now is to do an initial budget development. And they need to estimate, based on what mission management told them, how much is needed to carry out planned program activities. So mission management shares with revenue management what they found out in that previous exercise. And then the revenue management projects the amount of money expected to collect from current fundraising events or current fundraising efforts, not events, sorry about that. And so I put under there, that's what revenue management, that's their responsibility for them to do. And one thing that they have to think about too is that if it's money that's been specifically given to that organization for this particular project, that's money goes there for that project. But there are other people who give money that can be spent wherever you need it. So it may be a percentage of that money that comes in that goes to this project, or it may be the whole amount. It just depends on what the revenue management's policies are. And then you have to determine the administration expenses, otherwise known as fixed costs, overhead, or indirect costs. And what the revenue management does is that they need to collaborate with finance management. Now, remember earlier I said we'll be touching a little bit on finance management, and it's finance management's job to figure out what those overhead costs are, or indirect costs, so that those pieces can be allocated to the programs or the projects, so they're covered and paid for. Now, here's an example of an initial organization budget example. And it's got both the programs. It's got the programs in here. And when I wrote this, this is basically, we weren't expecting to have a lot of money come in, and this is actually this case study is based on a real program. And we expected a lot on our volunteer side to help with this. That's why there's no, there really isn't any labor in here. And I didn't include any labor. I just included the fixed costs. I didn't include staff costs. So you have to remember, when you put something like this together, you'll need to put in staff costs. But under the income, we have volunteer hours, we have individual contributions, we have membership revenues, we have in-kind donations and any special events revenues, we have sponsorships, income producing activities and stuff. So we'll get into those other things as we go along here. But I just wanted you guys to see that this is a a basic initial budget that you start with what you have on hand right now, right this moment, not what's coming in or what you expect to come in, but what's going on with this right now. For the PTC programs, or the Plateau Traditional Cultures programs, they have 3 programs. They have a traditional foods and plants, which identify, locate, use, and prepare foods and plants. There's a traditional arts, which makes regalia, drums, bows, as well as fletching, hunting, games, conveyance, etc. And traditional ceremonies, which are rites of passage, and they have elements of traditional foods, plants, and arts. So what that means is part of the traditional ceremonies, you learn how to identify and locate and use certain plants and foods for ceremonies. You learn how to make regalia, drums. You learn how to hunt. You learn how to prepare the food that you've captured on hunting, etc. So that's what all those are about. And then to develop those programs, which is the program elements, activities, and people, there was a collaboration among the mission management staff and volunteers. So they had to determine what elements of that program was important to the community and what could they do to provide quality activities, and how many people do they have on hand that can help with that have the background and the experience to teach all those things. So they also had to identify expenses that are associated with specific program activities. So again, there was a collaboration among mission management staff and volunteers. They had to identify what kind of expenses do we need. If we're starting from the ground up, what do we need? You know, what do we have to buy? What are one-time purchases like capital expenses? And then what are things that are going to be recurring, like, you know, food or maybe fabric and things like that. So these are equivalent to variable costs or otherwise direct costs. So this means that these costs are associated specifically with the program. So then allocated administration expenses are expected as part of the program expenses. So what that means is that there has to be a collaboration between mission management and finance management to find out which percentage of overhead costs are going to be allocated and paid for by that specific program. So those are your indirect costs. And when you fill out a grant application, and I'll get into this more next time on our next workshop, not one next week, but the next one in October, where we talk about the grant writing process. So this is where that comes in here, is you'll find out that many of the grants that you apply for ask for what are your direct costs and what are your overhead costs. So that's what, these are some words I want you to get used to hearing. So the program budget development, you have to estimate program costs that are needed to carry out all planned activities, and this will be an ideal budget. The reason why I like people to develop an ideal budget so you can see exactly how much you're going to need to pull this off. And when you get together with revenue management, then you will see, okay, we can't meet the ideal budget. And we can't get any extra money and time to pull off what we want. So what would be a next level budget? We don't want the bare bones budget, but the next one in the middle probably. You know, what can we do to make this a middle budget? And so again, this will have big collaboration among the mission management staff and volunteers, because they have to determine, okay, what do we really need to have all this? You know, how can we cut back on this amount? Or how can we take this ideal budget down just a little bit if we can't get all the money that we need? And then to project the amount of money expected to collect from current fundraising activities, again, it's a collaboration among revenue management staff and volunteers. They need to identify where can they get the money. Can we pull off a real fast fundraiser? Do we do a crowdsourcing fundraiser? Do we have a garage sale? Do we have a bake sale? And what can we do to get this money that this program needs? So everybody has to come up with some ideas. And then again, determine the administration expenses or the indirect costs. So it's a collaboration among finance management staff and volunteers. They have to identify exactly what percentage of overhead costs are going to be charged, so to speak, to the program or allocated to the program so that they can cover those costs. So the program cost estimate, you have to research all your items and costs associated with each program activity, and you need to include shipping, taxes, fees, etc. And this is important because with the advent of the internet, this has made researching these items so much easier, because what I talk here about printing each research document as a PDF and save electronically, what that means, you can go to Amazon, fill your cart with what you want, save that cart, and then don't buy it, but you're just researching it. So you can either add it to a wish list or set it aside. You can do that with any store now, and go in and find out what the cost of those items are, and finding out how much the shipping and taxes and fees are, etc. And this is something that the mission management staff and volunteers do to make sure that they have everything they need to identify how much or estimate how much it's going to cost to provide all these items. And then what you want to do is you want to round up the cost to the nearest 10. For example, if the item cost of shipping and taxes is $74.34, then round up to $80. We do that to make your math a little easier. And you may end up having to purchase this later, but you don't know for sure if the costs are going to go up or if they're going to go down. But at least if you have $80, it'll give you just a little bit of cushion there to cover any unexpected raises in price. So again, this is another collaboration on mission management staff and volunteers. Okay. So this is what a cost estimate looks like. As you can see, I've got total cost estimate is in the left-hand column, and that adds the costs from the class 1, class 2, and class 3, which are that go across to the right, towards the right. And some of these, where there's zeros here, the 8-piece knife set, those are shared among the other 2 programs. So they're where you see dashes like that at activity plant gathering, all of those costs are covered by the first program, which is traditional foods and plants. And then some of this here, the knife set, coolers and stuff, that is also part of the foods and plant program. And then other, let's see here, the ceremony supplies, you buy them for the first class, but you don't have to buy them for the second and third class. Same thing here. If they're already purchased for the first class, you don't have to cover them in class 2s and 3. So this gives you an idea of where those numbers came from that I put in the quarter 1, quarter 2, quarter 3, quarter 4. I took the numbers from here. But this is an idea. This was in an Excel spreadsheet. And like I said, I had to cut it and paste it so it all fit on one slide. I believe in the workbook or the case study that you guys have received, it has it in a full sheet of paper so you can see the whole thing total that way. So cost estimate tips. So to itemize all program project activity costs, research into a spreadsheet or workbook. So we go back to this. That's what I did here. This was put in an Excel spreadsheet. So I like it because it's easier to add things up and I don't have to worry about my math being wrong. Of course, unless I use the wrong formula. So everybody understands that. So, but if you use the correct formula, you should be able to get your costs in place. So this is also a collaboration among mission management staff and volunteers. Everybody gets together to put that spreadsheet together. And then project program funding received. That's a collaboration between mission and revenue management. You track all in-kind, all volunteer hours, and all monies received. And these are your current resources that you have. And then you enter those resources in the workbook against the item to be covered. I didn't do that at that because it gets a little bit unwieldy. But if you do that, if you put those resources next to, like if you say here, let's go back up here. You put those resources next to, let's see, let's pick something here. Well, of course, there's nothing here I can think of right off the hand. But if you put in here, root digging hoe, And if there's a little, there's another column here, you can put donated by whomever. They donated 4 root digging hoes, so you only have to purchase 4. So, you want to keep track of those in the same way so you can identify where that resource is coming from. And then you can identify how much more you still have to purchase or obtain to make sure that everybody has what they need. And then you have to analyze project cost estimates against funding received for the project. Again, this is a collaboration between mission and revenue management. It identifies resources needed to cover remaining costs. And then one thing that the revenue management team has to do is that they have to pay close, excuse me, that's a typo, it should be pay close attention to restricted funds. Some funders may not fund capital expenses or allow more than 10% in indirect costs, or they direct where their money is to go. So either to the workbooks, trainers, website, interactive tools, whatever. So they have to pay attention to that. That's important because if you don't follow your funder's rules and you said, oh, it doesn't matter where we put it, we'll go ahead and put it over here under language. And they don't want it under language, they want it under the under plant and food preparation, that they may end up not funding you ever again because they may ask you for a report like, oh, hey, where did you put the money that we gave you? And you say, oh, we decided to put it over here under foods and plants. And they said, well, no, we wanted you to do strict language with it. They may be okay if you say, well, we used it to develop language for how to name the plants or to talk about the process that was going through to prepare the plants. Some funders may be okay with that. Others saying, no, that's not what I intended. And they may not fund you ever again. So you have to pay attention to those restricted funds. So here's the ideal ceremonies program budget example. So here's the revenue that was received. So we have in kind, we have income, and we have revenue. We also have the volunteers. That's what we talked about here. We also have the projected, how much that we are expecting to come in, that we filled out this many grants, this many other in-kind resources coming in, how much somebody else is going to donate. This is our, we'll talk about this as a corporation donation, the Tribal Business Council. How much should we fundraise? How much will we fundraise? How many more volunteers are we going to have? And how many private in-kind donations that we know are coming. Now, the in-kind donations can be anything. Like for our project there, we received a donation from the marina of bottled water. They gave it to us to provide that for the participants that they can have bottled water. Somebody also donated. I think they had jarred a bunch of huckleberries and made it to jam so they could do that. Some people came in and provided their time, volunteers, and made fry bread for everybody. So, you have to make sure you find all the resources that you can. Our expenditures, we have pilot project shared items. So that's the supplies, the tools, and the food and beverages and sanitation. That's what was shared among all 3 projects. Then the traditional ceremonies, this is their actual costs that they had for their project. And then miscellaneous is a storage unit for everything, so that everything that we purchased had to be stored somewhere and not just in somebody's house in the basement here or over there. They can get lost that way or used elsewhere, and somebody might, you just want to make sure everything that you purchase is in one place. So we wanted a storage unit. So under current monies, we had $78,795. And then the cost estimates ended up being $114,870. We needed to raise $36,075. And we had to figure out how that was going to be handled. So looking at the revenue that we projected, it says $119,120. We were idealistic about that because we knew we probably weren't going to get all of that, but hopefully we got enough to reach that $36,075. All right, so I'm glad you guys had a chance to take a little break, and I'm glad I had a chance to take a little break. So let's go ahead and get started. We're back with fundraising sources. And so The first part, the very important part of fundraising, is that you need to have donor engagement. And this is really important because I don't think a lot of people realize that in order for you to have a potential donor or even a partner, they need to see or interact with your nonprofit's brand or someone from your nonprofit at least 7 times in a year before they're inclined to take any action, otherwise known as giving their money, volunteering their talent or their time to your organization. So there's several different ways that you can have that they can touch you or reach you or see or interact with your brand, and that's through social media or through newsletters. You can hand out flyers. You can have any digital communication such as email or e-flyers, or even participating in a Zoom introduction meeting about your organization. It can be word of mouth that they've heard something about you through somebody else who's also interacted with you, or in person through events or meetings or any place, like if you have a table at Pig Out in the Park, maybe they saw you there, or through the phone or any other kind of virtual meetings of some sort. So those are several different touch points that you can actually begin to engage a donor. And then through that, you can also raise money through fees for goods and services. They can provide donations. Like I said, you can also have events or outreach activities. We have bequests is another way to have sources of funds coming into your income. Corporate contributions, grants can either be private or public, through contracts or co-op agreements, through sorry, my camera's in the way again. Investment interest, through loans or PRIs, and we'll get into that in a little bit, or through membership dues and fees. So and we'll go through each one of these individually so you guys can see what these are all about. Let's talk about fee for goods and services. I've had questions asked from some of my clients is if it's okay for nonprofits to actually charge for goods and services. And the answer is yes. What the caveat is, as long as it falls within your mission. And as long as all profits that you earn go to the nonprofit itself and it doesn't benefit the staff, directors, the board, or anybody else, it just benefits the nonprofit. So you're earning money for your programs or you're earning money for your projects. You could be even earning money for your admin costs, to cover the indirect costs that maybe some of your grant funders won't cover. So you're earning money that way. So your activities has to be within your organization's mission. They're not part of an ongoing business, and that the income or activities are subject to special IRS exemptions. Now, in this book, Effective Fundraising for Nonprofits, and this is from the 2013 edition, they may have come out with a new edition by now, but NOLO is a publisher that has these kind of books, and they actually are pretty good books. I have a whole bunch of them, and it's called nolo.com if you want to ever look for them, and you can buy them online. So it's pretty standard practices that they give here. Also, the summary of this is that yes, you can sell goods or services to raise money if they already fulfill your mission, and that when you have this kind of thing, these direct payments or otherwise, which is a good or services is a direct payments, it confirms that your work is valued by the community. So if you sell these things to your community, then they value what you do. They will purchase it. So some examples of goods and services that you can use if it falls within your mission is summer camps, childcare, therapy, job training, food from gardens, like you sell it at the farmer's market, if you have a museum gift shop, etc. So those are the things that can actually be covered by goods and services. Some tips on this include, before making any final business decisions, read this IRS publication, and then also read the book I just told you about, Chapter 9, for summaries of that section, and also consult an attorney. So I'm not giving you any legal advice. I'm just giving you some suggestions. So don't come sue me for this because it didn't work out for you, but I'm telling you, go consult an attorney or go read the IRS publication 598 to make sure that you fall within their within the guidelines. So the next one is individual donations and major gifts. Now, donations come from individuals, and those can be either recurring donors or they can be a one-time gift, a large one-time donated gift. Now, this is where donor engagement becomes really important, especially if you want to keep getting those large gifts, making them into recurring gifts. And this is where you engage a donor a lot. Now, this diagram here, individual donor development and engagement, this was crafted by Ticini Pete, who I worked with at Potlatch Fund, and he had gone through the Benavon training for donor engagement, and he took what they had and he developed this into a year-long seasonal schedule for engaging donors. And what it is and explaining this, you have potential donors out there who may be interested in you, who don't know you exist, but you want to get them into your so-called donor family. And at this point here where it says introduction, which is the spring, because spring is the start of all renewal, right? So the spring is this place where you start. You introduce them to your organization. They had heard about you from word of mouth from a friend of theirs. So you ask your friend, their friends who are already engaged, you ask those people who are engaged to bring a friend or someone who may be interested to come and see to a certain activity or to a certain outreach event or something that you're putting on so they can see what your organization is all about. Now, there's a choice here that potential donor can either continue on through the circle and to become inspired, or they find out it's not for them and then they go ahead and leave. And you don't begrudge them that. What you do is you send them a thank you letter. Say, thank you for attending our event. We were glad to meet you, and we hope that you would continue to find out more about us. But if you feel that you cannot do so, we we were glad to meet you, and we hope you enjoy the rest of your year or whatever, something like that. Just making sure it's not something surly and saying something nasty about not giving them money or something. You don't want to do that because then they will go around and tell people, well, if it's a nice letter, say, I'm not interested in that, but I know somebody else who would be, and then they would send them your way. And so you would gain a donor through a potential donor who decided that you guys didn't really click. So if you did inspire them, then you ask them to become involved. You have them come take a look at, maybe you're doing a class of some sort, and you ask them to come and be involved and watch and observe what's happening, or have them help hand out refreshments, do some little volunteer thing where they don't have to do a lot, and then they can see your programs in action. And when that happens, you invite them to a fundraising event. And if they really feel that they've been involved a lot, or that they've taken experienced what it is to be part of your programs, like for example, Potlatch Fund still funds, I think, canoe journeys, and they would invite some of their donors, usually the big name donors, come along and come ride in a canoe and experience what a canoe journey is about. And when they did that, they ended up with more money, and they also ended up with more donors because they'd say, "Hey, I took this great ride on a canoe and found out what this is all about. You would be interested in this. Why don't you come join us at the gala, and you can find out more about Potlatch Fund." Now, the gala is the part where you would ask for money, or an event. That's what the invite is all about. You're inviting them to donate. They don't have to. Do not do a hard sell. Just make sure that they know that if they can donate or not, that's up to them. But then if they do donate, that's where the top maintain winters are all about, is that you keep involving them, you keep increasing their involvement, you keep asking them to bring their friends and stuff. And so that's where your sustainable donor comes from. And so that's what this is about. And I hope that helps. I don't know how your individual donors are or how your donor engagement goes, but I think this diagram that Ticini put together really explains how to continue your donors and make sure that they're recurring donors and that you keep them engaged for a long period of time. All right. So after individual donor engagement, excuse me here, we have events and outreach. And these activities have goods and pros and cons to them. So for pros, it's the highlight of your fundraising year. You may just have one big event where you gather all your money, or you may break it up into maybe each quarter or maybe half the year, semi-annual, however you want to do it, or however amount of people that you have to help with this, because sometimes if you have a big event like gala, it can take a lot of people. A lot of people. I think Potlatch Funds Gala, which is coming up, I think next month, takes close to like 50 people to put on, and more than half of that are volunteers to help with that. So it's a big, and they start planning, or they should start planning. Well, we used to start planning 10 months ahead of time. So you want to make sure you have that. And what these events do is they also increase awareness of your organization. So people know that you're there. It gives you direct contact with any donors, either your recurring donors, one-time donors, or potential donors. And it allows you time to mobilize volunteers. And the volunteers have a chance to see what you're about. So maybe they will continue to be volunteers for you, or they may end up being part of your volunteer pool that you can draw from and hire staff from, because they're already know what's going on with your organization. And of course, they generate additional revenue. However, there are some cons. There may be times where you might have public embarrassment, that something will happen during these fundraisers that you hadn't expected. Of course, nobody expects something to happen, an incident or something that causes embarrassment. You may put more money into it than you should, and you may end up losing money, meaning that instead of generating additional revenue, maybe you just basically broke even, or you even took a big loss because you spent too much money in the event itself. And again, like I said, there's no additional revenue made because you overspent. You didn't make as much money as you thought you would. But however, the events and outreach activities can be based in several ways. There are calendar events that you can base it seasonally or based on what the program needs are. You need to consider your audience, if there's an age group or an interest in a specific program. You also need to incorporate fun. You need to make it fun and not boring and stuff like that, because people want to have fun at these things. And then you want to plan the goals and return on investment for each activity or event. And that's important because you want to make sure that everybody stays on task. We're going for this because we want to do this goal, and we want to return this much money on how much we spend. And that's important because you don't want to end up with that con where you're spending too much money and you're not getting anything back, and you lost money instead of made money. So some examples include an active, inclined, or inspired audience, people who like to run, climb, hike, whatever. Those who are arts inclined or inspired audience, that who want to see dance or meet artists who paint or artists who sculpt, or they maybe want to participate in something that has art involved, who are like to go out to nature or inspired by nature, do you want to do some kind of thing? Like I said, canoe journey is also a nature inspired thing. Something for the whole family, not just adults or not just kids, but everybody can participate. They can be holiday themed or holiday inspired. And then you can have big gatherings, like everybody can come together to like a gala or a barbecue or a picnic or something, or everybody can come together. So some other examples of those types of things would be lunches, dinners, tastings, and other food events. Food is a big thing. You can actually get a lot of people at food events. You can have auctions and raffles. You can have fairs or festivals. You can have benefit concerts, lectures, and presentations. You can have a-thons, tournaments, contests. You can have home and garden tours. And as I mentioned earlier, you can have garage sales, food sales, book sales, whatever kind of sales, anything you can sell, I guess, to make money right away. And one thing I didn't put on here was crowdsourcing. So that can be in here too. But it's not an event, but you get the idea. So not all special events are fundraisers. Now keep that in mind. They can also be used to make friends or bring in potential donors to learn about your organization. Now, an example of that, and I keep having to bring up Potlatch Fund, but this is something that I know about because I was part of this, is that we would have Native American friends and artist nights here in Spokane at the Philanthropy Center where Empire Health Foundation is housed. And we wouldn't make it a fundraiser. We would make it an introduction to people in Spokane about Potlatch Fund because Potlatch Fund was based in Seattle and not everybody knew who Potlatch Fund was. A lot of people thought Potlatch Fund had to do with Potlatch, Idaho, the big, huge timber place down there. And that's not what we were about. We're about, over in Seattle, raising money for Native American organizations. And so we would have people come to this Native American and art, Friends and Art pieces. And on the first Friday of each month, we would have artists set up their art pieces and they could sell the art if they were there. We would have people who had received Potlatch grants come and give a testimonial and talk about Potlatch Fund. And then if people wanted to, they could donate if they want, or they could take part in because we always had pizza or some kind of food, and we also had wine and beer there, so people can. It basically was a social event. So that's what we did. It wasn't really a fundraiser. It was more like a friend raiser. And we had a lot of people sign up to learn more about Potlatch Fund and what they wanted to learn about. Did they want to learn about the language? Do they want to learn about Native artists? Do they want to learn about how all the different nonprofits that we provided funds to, what were they like? So it was quite the event. It was really a nice way to learn about different people that the donors could learn about us. On the next part, the bequests, I think I mentioned this last time, is that you don't really think about bequests. You hear about it, but it just doesn't hit you as a type of fundraiser. But, if you've seen KSPS, some of their commercials that they have on their channel is leave money to, bequest some money to KSPS, put us in your will. That's exactly what this is about, is, making a way for potential donors to leave a specific bequest of money or property that would name the nonprofit as the beneficiary. And this can be different kinds. Like I said here, it could be a residual bequest of the remainder of an estate. It can be a contingent bequest in which the gift to the nonprofit occurs in the original beneficiaries if the original beneficiaries die before the donor. So that's something to consider. Now, corporate contributions. I kind of mentioned that in the PTC case study there, is that the Spokane Tribal Council did make contributions to our program, but it wasn't always money. Part of it was money, part of it was in permits, so we didn't have to pay for permits to have a fire, or pay for hunting permits to get their venison, or they would have the tribal hatchery donate the salmon. So, it's not just money, and it can be quantifiable with other things too. So sometimes when corporates do donate, it's to make sure that they invest in the future of their business by contributing to their community. And this also builds goodwill and brand recognition and loyalty. And what happens with this is that if you're having an event and part of that money that you're using to put on this event is from a corporate contribution, you can put their name or their brand on the agenda or some sort of slide that says, we'd like to thank the following corporate sponsors, and put them on there. That gives recognition to the community, saying, oh, they cared enough to give money to help put this event on to help the nonprofit. Maybe we should start working or spending our money there. And then if their corporate values align with the nonprofit values, it could lead to a strong partnership, as I said, and sponsorships. and other things that can help out. So if it's like, for example, there's a nonprofit in Ohio, in Columbus, Ohio, where the Scott's company is, and they're the ones that provide lawn, seed, fertilizer, that type of thing. They got a partnership with them where they provided seed, lawn seed or vegetable seed and fertilizer for their community garden. So they ended up with that partnership. And then NACO, which is the Native American Indian Community Center of Central Ohio, who they partnered with, they put their on the plaques where the community gardeners were, sponsored by Scott's Lawn Company. I think that's the name of it. Um, and again, here in Spokane, the Sailor School of Spokane had a partnership with the Spokane Indians baseball team, and they came and helped plant. They purchased some of the trees that are native to the area and other plants, and they helped come and plant them with the kids. So that's another partnership. So there's a lot of different ways corporations can contribute to nonprofits. It can either be, like I said, money, or it can be time, as in volunteering, or it can also be bringing in um, sponsorships for certain events and things. So it's worthy to start testing those waters and finding somebody whose values align with your nonprofit. Now, grants, we're going to talk a little bit here about grants. We're not going to go into this in big deal because on the next workshop in October, I will go over grant writing processes and stuff, and we'll talk about grants in more detail. But I broke these down into private and public. So private grants is what a private foundation or private organization gives to a nonprofit that applied for the grant award. And usually what they ask for is for you to describe how your vision, mission, and values align with that private foundation's vision, mission, and values. They want to do that so they know that they're giving money to people who understand what they find important. One thing about grants is that they are free. They do take a lot of time to fill out. You are likely to win more. Once you win one, other funders are more likely to award you. And it builds credibility as an NPO that understands vision, mission, and value alignment. And that's important because once they see, oh, we're kind of like that foundation. We see that that foundation gave money to you, so we'll go ahead and give money to you. So that's how that kind of works. Public foundations or public grants basically is an amount of money that a government gives to an organization for a particular purpose or filling an identified need in a specific community. Now, this means either federal government, state, county, or city governments. That's why they're called public grants. These also are free, but these applications can be very long and detailed. For example, the SAMHSA, Substance Abuse and Mental Health Services Administration, has the top amount of pages that you have to submit, or you don't have to submit, but you can't submit more than 150 pages in an application. So that, as you can see, is very long and very detailed. And that's how come they release it they release the notice of funding opportunity at least 8 weeks before it's due. 6 to 8 weeks before it's due to give you time to put one together. If you find one and you see that it's due in 2 weeks, don't bother. You're not going to have time to write. Take a look at the page limits. If the page limits is over 50 and you have 2 weeks to put it together, it's going to be very hard to do so. So be aware that you need to look at, do you have people in your nonprofit that can write this other than your executive director? So you have to make sure. I know the executive directors have a lot of hats to wear. Some of them are writing grants. But if you don't have time to write a grant, you can save the notice of funding opportunity and work on it throughout the year. So when it comes up again, then you can apply for it because you've had time to prepare for it. Now, one thing that's interesting about federal government grants or federal government, they can be up to millions of dollars and for longer periods of time. Like, for example, a client of mine applied for a 5-year grant at the federal level which totaled up to be close to $7.5 million. And so that's what I mean about it can be up to millions of dollars. It just depends on what's expected of you to do that. Now, grant award obligations for any government grants always include reporting. Now you can have long reports. They can be semi-annual reports. They can be annual reports. They can be quarterly. It just depends on what the agency requires. You'll also have in-person meetings, and also you need to have very strong financial accounting practices. That means you have to account for every single penny, and you have to have an audit, and you have to make sure that those accounting practices keep track of everything. And because if you don't keep track of everything and it's kind of a sloppy thing that you have, you're not going to get another federal grant. And in some places have been not necessarily banned, but they have just been, you have to meet certain criteria above what was required. Or if you win that grant award, you have to meet certain criteria above what was required in the NOFO if you have problems from previous grants. So be aware that's something that you need to have, that those strong financial accounting practices need to be in place. Okay. Now, the prospecting practices you need to research various foundation and government funding cycles and giving histories. This is really important because then you need to know when those funding cycles come up. You need to identify alignment with vision, mission, values, which we've already discussed earlier. And you have to develop a grant writing timeline and stay on track with deadlines. You cannot miss the deadlines, or you might as well just have wasted a whole bunch of time for nothing. Or you can bank that time and apply for it the following year. And you have to manage your organization's applications to each foundation. So if the only person writing these grants for your organization is the executive director, you have to take into account what else is she or he doing or they doing for your organization. Do they even have time to write grants? If they don't, you might consider hiring someone in like a revenue manager, who is sole purpose is to find funds or income or revenue for your organization. So keep that in mind. It helps keep your executive director from burning out with all the information and all the activities and roles and responsibilities that they have to do. All right, the next piece here, contracts and cooperative agreements. Now, these are not as flexible as grants, and they have minimal involvement from the sponsor with general terms and conditions. And then contracts, the involvement from the sponsor means what kind of conditions that you have to agree to, or what kind of regulations, things like that. So for contracts, they have extensive sponsor involvement because they have detailed terms and conditions that they have to follow to produce tangible goods and services from the organization. So you have to meet certain, like, regulations, things like that. And if you don't do that, you're in danger of having your contract revoked. Cooperative agreements include substantial sponsor involvement, and services are specifically described. And most times those cooperative agreements not just involve, writing the contract and signing those agreements, but also has the sponsor working with you to make sure that that cooperative agreement is completed. What I'm seeing right now is that for the federal government is actually offering cooperative agreements to nonprofit organizations, especially those who are working with their community. And because those nonprofits have specific experience with certain communities or the communities that they serve, and if they happen to be the same communities that the federal government wants to provide help to or provide assistance to, they will release a cooperative agreement for people to apply for just like a grant application, but it's a cooperative agreement application. And then if you win an award, then you're working with the federal government to provide services to your community at a much higher level of revenue than you normally would by using just foundation or other monies. That's something to keep in mind if you're looking for money to move your services forward. Investment interest. This is something new I hadn't seen before, and I think it's because it's something that I had never been part of. But nonprofit organizations can have investment accounts, and you should probably have one. And I'm not giving you legal advice here, but this is just stuff that I found at this website here called infinitegiving.com. And they say that as a registered 501c3, you're generally exempt from paying federal income tax on investment portfolio dividends and gains. But to do this, you have to move from a scarcity mindset to an abundance mindset to truly build a sustainable organization. So, what that means is that you can bring in all the money you need to build that ideal budget we talked about earlier. And the scarcity mindset is that, oh, we just work with what we get. That would be not the ideal budget, but the bare bones. But the bare bones is not serving your community as efficiently or as successfully as it needs to be served. So you want to move to an abundance mindset that yes, we can find all the money and all the income we can to meet that ideal budget. So I want you guys to keep that in the back of your mind too, because that's a mindset you need for fundraising. And so you need to make sure you have good financial strategies. If you don't have a strong finance management team or someone on your board of directors who has a strong finance background, you might consider trying to find somebody who can, an advisor or a financial consultant that can help you build um, like investment interest or brokerage accounts or something like that to help be one of the pieces in your fundraising plan. Okay. So loans and program related investments. That's what a PRI is. That's what that was at the beginning here. So basically loans for nonprofits are financing products for which the organization qualifies. Now, really your best bet is that you can get a loan from online sources or from a community development financial institution or credit unions, mostly because a lot of them are nonprofits themselves. Now, banks don't generally loan to nonprofits. If you've already tried to get, some banks will, but not all will, not the bigger banks. But they don't generally loan to nonprofits because they're interested in profits. And so it doesn't really align with their values. So that's, again, you have to think about those values and missions and visions and stuff. You know, who would you be able to get money from to help you move forward? So, for example, if you win a contract or get cooperative agreement from the federal government, you have to have money to cover at least the first quarter of that contract because you have to go through a lot of hoops to get the money from the federal government. And sometimes when you submit an invoice for them to pay you, it can take up as much as 60 days to get that money. So you want to make sure you have some kind of cushion, which means you need to get a loan or something. And if you show them that, yes, we won this contract, here's the agreement and stuff, then you have a being able to secure a loan to cover that amount of money so that when they know that once that money starts coming in, you can start paying them back. So PRIs, we're talking about those now, are a type of mission or social investment that foundations make to achieve their philanthropic goals. Now, what's interesting about this is it's kind of like a loan because they're expected to be repaid, but it's mostly at a modest rate of return, like sometimes a 3% or even less. Some of the things that I read, it can be 3 to 5%. So you need to take a look at that. That there are vehicles for making inexpensive capital available to nonprofits that are addressing social and environmental concerns. So it's kind of like a grant that way. But like I said, they are expected to be paid, so they're kind of like a loan. So it's like a combination grant loan thing. And then when that money is repaid, that foundation can take that money and reuse it again, to loan that money out to somebody else. So it sounds like something that a lot of people might want to take a look at. And the last piece here, membership dues and fees. Therefore, a membership program allows for organizing supporters and donors into groups based on their level of involvement or engagement. It allows you to receive funds immediately. It can be a predictor of future contributions, and it can diversify your revenue. So not everybody has a program set up or organization set up to receive membership dues and fees, but there may be some program that will allow you to do this. So if you take a look at your programs that you have set up, maybe you can have membership dues and fees going on. So it might be something to take a look at, do more research on it to find out how you would be able to do something like that if this interests you. So what about a fundraising mix? So before I started working in the nonprofit sector, I always heard that, nonprofits should have at least 80% grants, 20% donors, focus mostly on your grants and stuff. But when I was working for nonprofit, which was Potlatch Fund, I heard something differently. I heard, oh yeah, ideally you should have 20% to 30% of grants, and the rest should be diversified in other ways. So here's some things that we're looking at. I just threw up some numbers here so you can see, how you might want to mix up your fundraising activities or your fundraising sources. All of these are just things I just threw off the top of my head, but it gives you an idea of how to identify a fundraising mix that is ideal for your nonprofit. You need to take a look at all the kind of money that you're getting in now, maybe taking a look at, what kind of percentage out of the 100% of money that we have incoming, how much is this and this and this? How can we split this up more? Because the more diverse mix that you have, the better off you are for sustaining your programs. And the reason is because you don't want to put all your eggs in one basket because you might lose them, right? So you want to make sure you have a lot of different kinds of money coming in that will cover not just money, but resources coming in that will cover the needs of your programs so that you can have successful programs that serve your community with quality services and goods and information. Okay. We're almost done here. Where are we at time-wise? We have about 30 minutes left, so I think this is next to the last piece. So fundraising plan. I kind of touched on this a little bit, but you should have a fundraising plan because it provides organization on what your funding sources are and where you need to go. It tells a compelling story about your organization at its work. Keep that in mind. I'm coming back to that later. It defines the responsibilities of who needs to do what and the roles that people play within your organization to fundraise and to bring in money and revenue. It sets deadlines so that you know when certain things are done. It provides a credible fundraising tool, and it measures the progress in your fundraising. Now, there is a process to writing a fundraising plan, and depending on who's writing it, it can take a lot of time to write, or it can take a little time to write. It can it involves research, so you know exactly what kind of funds that you're looking for or what kind of sources that you're looking for. It takes meetings and consensus building among the staff and the board of directors and the community. So you want to make sure everybody's involved so that everybody understands where the money is going to come from. Who is writing the plan? So you have to make sure you have somebody that writes the plan, and it builds support among everybody in that nonprofit holistic model that I put up there. Building support from the community, building support from the board of directors, building support from the staff and volunteers. So there's key parts of a fundraising plan. I always thought it was funny that they put in cover page. Well, of course, everything's got a cover page. So yeah, that's a key part. The background, which explains the current activities that will influence the plan, what goals and objectives you have, what assumptions that are made in formulating the plan, what kind of infrastructure that you're going to have in place for fundraising, and if there's going to be future infrastructure needs. And what that means is that, do you have a specific department for fundraising? And if you don't, or you talk about what your current fundraising infrastructure is, if it's the executive director, that's not going to cut it. That he, she, or they need more help than just being the only ones writing or looking for funds. They need help from the board of directors. And if they don't have enough staff, they need to hire staff so that they can. We have a revenue manager that can start taking this job over and making sure funds are being raised. You need a donor prospect plan so you know where to find new donors. You need also what's missing here, it should be the donor engagement plan, which is part of the donor communications and cultivation. How do you communicate with donors? How do you engage your donors? What do you find out about them? How do you bring them back? How do you have them bring back new prospects for you? What kind of tactics do you have to raise money, and how do you use those tactics? And then what are your needs and goals? Like, what is needed to raise the money, and how to raise it, which is tactics with monetary goals for each tactic. So it's basically, you really do need to sit down with everybody to get an idea of how you're going to put this together. And then you need an action step timeline. So this is lists in each section with deadlines and responsibilities chronologically so everybody can see when you're going to meet this goal. Now, it's kind of difficult to have a fundraising plan in place while you're trying to do other things at the same time. If you're going to have deadlines in place, don't make them right away. Make them further out, because you want this fundraising plan to be launched at the beginning of your new fiscal year. So you want to take time to, like if you're in the middle of a fiscal year, make it start at the beginning of the new fiscal year. If you're just starting a fiscal year, make it start at the beginning of the next fiscal year. So you have time to do your research, understand what your donors like, understand how your donors like to communicate, find out if your donors even like the kinds of things that you're using to fundraise. You may need to change your mind on that. So give yourself time to write this, but make sure you put one in place. So a template would be gathering information on past fundraising events, because you need to know where to go, but you have to identify where you've been. So what kind of fundraising efforts did you have in the prior year? What kind of fundraising efforts do you have this year? And what do you want to do next year? Because of all the information that you gather from your donors, you may have to change your kind of efforts to make sure that you get the most you can. Analyze your past fundraising efforts and strategies. Again, consider the questions. Might put some questions together like, well, how did we get these new donors? Contact them, ask them, well, why did you want to donate? I mean, we're just trying to gather some information. What made you decide to donate to us? What was it about that we did that inspired you? And evaluate the current climate. What factors affect the ability to raise money? We just went through a pandemic, and we're coming through again with another round of infection of COVID. Maybe there's something else. What's the economy like? Are you going to be able to gather any money? Maybe it's going to have to be just resources and volunteers, so you'll have to figure out what that's going to be. You need to set two types of goals: a strategic goals on fundraising and also financial goals. So you know how much money you need to continue the work you're doing now, or how much money you're going to need to raise the bar so that you reach that ideal budget and ideal activities. Who is on the fundraising team? That's important. What activities will be part of the plan? So are you going to have new funders? Are you going to renew current funders? Current donors to increase their donations? How are your donor relations? What will you do when? And so that's a timeline development. And then fill in all those pesky details. And pesky details can be different between different organizations. So that's something that you'll have to determine what those details are. So the finale to the plan now, put it all together, put everything in one chart or one book. Decide how to evaluate your progress. What kind of factors will track success on your fundraising? Is it financial goals? Is it donor relations effectiveness? Is it, your community adding into that tracking success? Who has ownership of the fundraising plan? Is it the staff, board, or community members, or is it everybody? And it should be everybody has ownership, and everybody should be participating in raising funds for your nonprofit. Okay, last piece here, compelling story. So a compelling story is something that you need to raise money, and it's very specific and it's vivid, and you want to visualize the events as they happen and feel the emotional ups and downs. So basically, it's a story that contains a lot of pathos and it tugs on your heart. And so it is the core document of your fundraising plan because it inspires people about the work you do. It persuades people to give money to help you do that work. And it mixes facts and emotion together. So you give the facts of what you did, it inspires them and it persuades them. And it gives the emotion of something important that happened to your community because of the work that you did. Thomas Ahern provided this quotation. It's a great, compelling story stirs the soul, the hairs on your neck rise. So you need to talk to your community members, find out what their stories are when they work and engage with your nonprofit, and find out which one is the most compelling story, and ask if you can use them as a testimonial to the work that you do in the community. So there's also 3 different levels of a compelling story. There's the elevator speech, and I'm pretty sure there are a lot of people who heard about the elevator speech. It's usually 60 seconds in length, and it generates interest in your organization, and it gives calls to action. The next level is an appeal to potential donors, partners, or funders. It's up to 3 minutes in length, informs with facts and inspires with, emotional appeal about the organization's mission and areas of impact, and it gives calls to action. The case support is a written 2 to 7 page document. It informs potential donors about the organization, accomplishments, vision for future, and why the vision is important. It gives potential donors a chance to be involved. And what's nice about the case support piece is that you can plug it into the written narrative for any grants. So that's that piece. Those 3 levels. Now the process is that to appeal to potential donors, you need 3 items about your organization. You need an emotional appeal or a hook. Why do you work for your organization? Are you passionate about the work you do? Why are you passionate about the work you do? A call to action is an example to attend an information event. You know, let's see. And then the summary is that it's a detail-rich summary about a beneficiary of the NPO that will connect with the donor. So that's what I said. Find somebody who benefited from your nonprofit's work and find out how it changed their life, how your nonprofit changed their life, and that will help connect with the donor. And when you connect the donors to your program work and your organization, they are more likely to give because it makes a big impact and inspires them to be involved with the work in the community that you do for the community. So as we close out here, I provided some additional resources in that link that Brandon provided you. And these come from the Classy resource guides, and there's their website there, classy.org. But it's a year of creative fundraising, a fundraising calendar worksheet, and a quick start guide to data-driven fundraising. So, and we have about 20 minutes left. So if anybody has any questions they'd like to ask, and here's my contact information if you'd like to get a hold of me. And let's see. I wonder if I should go ahead and stop sharing. I'm going to go ahead and stop sharing. Put everybody up on the board. Okay, so if you have any questions, you can raise your hand or you can type them in the chat box if you're feeling that you don't want anybody to hear your voice. Or if you have any comments or anything, actually, we have 20 minutes left. Or if you have a compelling story to share, that'd be good. Hey, Ella Jones Pina posted, thank you for a great presentation and for sharing all the resources in that Dropbox folder. You're welcome. My pleasure. And thank you, Brandon, for posting all those links. I appreciate it.
Hey, Maria. This is Johnny Edmondson.
Hi. Hi, Johnny.
I think you've been here for a while, but I showed up a little late, so I don't know if I have access to the Dropbox folder. Is that something that can get posted?
You kind of broke up there a little bit. I don't know if you're close to a microphone or what happened if you could you repeat that?
Yeah, I came in a little late, so I don't have the link to the other resources that you're
Oh, okay.
referring to.
Yeah, Brandon, will you repost the link, please? So he posted it in the chat box, so he'll repost it here again.
Great, thank you.
You're welcome. And then also, we have a survey. If you guys want to go ahead and take part in the survey about how I did, and if there's anything you'd like to change or make suggestions about, I'd really appreciate it. And then, Brandon, if you could put that link too. And then we're also sending out an email after this closes so that if you didn't catch the link in the chat box, um, you can also get it in the email too. And that email will also have another link to the documents as well. I want to make sure everybody gets the resources, and we want to make sure everybody has a chance to tell me what I did or to tell me off. So, Heather Wallace said, appreciate all your work putting these trainings together. You're welcome. I love to teach. I just don't like to grade. And so that's why I do these things. So, and there's the link to the survey. So if you guys can take time to do that, that'd be great.
Maria, I have a question.
Sure. Go ahead.
One thing that I'm dabbling with is applying for more sponsorships, uh, sometimes for our specific events or just for programs in general. But I'm trying to figure out the appropriate amounts of money to ask for and how to make some appropriate levels of giving. Do you have any suggestions for how to develop that or samples that are good to look at?
I don't have any samples for sponsorships, but if you do research on the places that you're going to ask for sponsorships, you can ask them if or if they may have it posted somewhere, or if they're on GuideStar or someplace that talks about how much money they give to certain places, that, or find something similar in size to that place that you're asking for sponsorships for. That might give you an idea of how much to ask.
Great, thank you.
If you can also give them a range too. I know when we were looking at Potlatch Fund for sponsorships for certain things, we gave like 4 different ranges of how much, and give them a choice of what to donate for. Is another idea. Um, Laurel posted, thank you so much for this informative presentation and resources. Looking forward to catching the recording. Okay, you're welcome. Same thing, we got a thank you from the Shades of Motherhood. You're welcome. A clap from Amara Gaiman. Thank you very much. Oh, thank you. I'm glad it was amazing. I'm glad you guys enjoyed it and learned a lot from it. Did you have any specific questions you wanted to ask? There we go. It's much better. Okay. Very informative. Looks like everybody, you're welcome. I'm glad you were here and was able to watch the replay. We will have this up and in viewable in we will post this as soon as we get the closed captioning completed, and so everybody can see that. Let's see. Got to put my chat screen back up. It disappeared. Okay, there we go. All right. So, any questions, comments? Any experiences that you have with any of the pieces that I've talked about today? Any new sources that you are going to explore that I went through? Okay. Well, if there isn't any questions or anything, I can give you guys. Oh, budget planning. Okay. Yeah, budget planning actually is one of those finance management things that takes a long time to go over. And when I usually do this in person, I have people in groups and I give them some examples that they can start planning budgets with and getting an idea of how that works. So um, uh, I hope to have something like that in the future on finance management where I can have you guys all in rooms with whiteboards and stuff so you can all play with the whiteboard pieces and things in the Zoom meeting. So we'll see how that goes. And Claudine Richardson said, "Love the cycle you shared for fundraising. That was great to think about. You're welcome." Ticini is very, he loves to have things shared out for people so that they can see things differently. Say, I'm so glad you found this informative. Right? Oh, so Tom said you can unmute now if you'd like, if you want to speak. So, yes, Wendy, that's true. The newest value of volunteer time for is $31.80 per hour. And in our last webinar, I did give everybody the value of volunteer time report that independent sector posted. So, and Jerry, thank you, Maria and Bexamita. You are very welcome. Both Tom and I enjoy doing these little webinars together. So, okay. Well, if there aren't any questions and nobody has anything more they want to provide or share, I'll go ahead and give you guys back the last 8 minutes of your evening. So you might catch the last 8 minutes of Jeopardy. So, and Tom has posted a webinar survey at the link. So if you have time, go ahead and go answer the Survey Monkey. And then also on the screen, you'll see a message on how to contact me. Also, we'll be sending out a follow-up email with the links to the documents that we provided here, as well as another link to the Survey Monkey, so you can go ahead and evaluate how I did. So, all right, everybody, have a good evening and enjoy the rest of your evening. Thank you for joining us today. And our next webinar is in October. So, thank you.